Sometimes things can get very complicated when it comes to business funding. Some lenders are asking you for a lot of documentation while others are pretty content. If you have some little paperwork, like you send them like your P&L and what have you. So in today's conversation, I want to explain to you how to get a low documentation working capital loan with fair or bad credit. We're not speaking about any type of loan. We're speaking about a working capital loan, which is a specific business loan that I will explain later on in case you have no idea what I'm talking about. But first, I want to really explain to you there are a few things you need to pay attention to when looking for a working capital loan with low documentation. I want you to become an expert when it comes to comparing working capital loans, because some lenders can really take advantage of you with crazy high APRs. They charge your fees and whatnot. So whenever possible, you want to pre-qualify. See, pre-qualification is kind of cool because it allows you to preserve your FICO score. It also allows you to see how much you could get, especially if you have a bad or fair credit. Chances are you may never qualify for the best loan amounts or the best windows in terms of rate payment. So it's always a great idea to test the waters, so to speak, and see what's available out there for businesses with your credit score caliber. And you also want to determine how you want to receive the funds, because sometimes if you are asking for low documentation, some lenders want you to have a bank account. Some are pretty fine if you tell them to send the funds to to another platform, to a PayPal account and what have you. So the possibilities are there. So, but you really want to determine from the get-go how you want to receive the funds were you to be approved. By the way, boss, I want to welcome you back to the show. It's really a pleasure to have you here to have conversations with you about this very important topic. And one thing I want to say here also is that when we talk about low documentation working capital loan, you want to think about the repayment terms and flexibility. Because again, some lenders are pretty flexible. They allow you to make payments once a month. Some lenders are not that flexible. Like they will want you to make payments every week. Some even want you to have like daily payments because they're kind of scared about you as a credit risk. They think you might default, so they want to actually increase the frequency of repayment. So you also need to think about the lender's customer support options. That what I'm trying to tell you here is that we just make sure you pick the right lender. Let's talk about what a working capital loan is, because maybe you heard the word for the first time today, or maybe you have heard it before, but you really have no clear idea what we're talking about. So working capital loans are a specific kind of loan. So this is a loan where this is the financing your business can use to pay for day-to-day operations. So this may include covering payroll, making debt payments, restocking inventory, and staying current on rent. So whatever is happening, you can use a working capital loan to take care of business. Literally, take care of business. And the term comes from the accounting concept of working capital. So working capital in accounting means current asset minus current liabilities. So when we talk about current asset in accounting, current means short-term asset. So short-term assets minus short-term liabilities. So anything that is short-term in accounting means that you are able to either repay it if it's a liability within 1 year, or you can monetize it if it's an asset within 1 year. I'm not going to confuse you with too much accounting jargon here, but I just wanted to give you the backdrop of today's conversation so you have a clear idea what we're speaking about. So when we talk about a working capital loan for your business, how does it work really? How does it work like for real? The thing is that this kind of loans are designed to help your business and other businesses pay for payroll, rent, or other everyday business expenses. So if you're listening to me right now and you're thinking, hey, listen, I have an LLC. I'm looking for a low documentation business funding arrangement. And, the cash is kind of tight. I need to really cover payroll. I need to cover inventory. Then you will need a working capital loan. Don't go for another type of loan, because if you go for a long-term loan, those loans take a while to actually disburse, because the lender doesn't know that the situation is very complicated right now. Because see, when you ask for a working capital loan, the lender knows right away, hey, listen, this borrower has urgent cash needs. There's nothing wrong with that. You're just trying to make sure, hey, they understand, hey, listen, you ain't got no time for for 1 week or 2 weeks or whatever, you need cash right away. So you can get this loan regardless of your credit. As long as you have the proper, and I'll talk about the documentation later on, you have the proper documentation. Now, let's talk about timing here, because you probably listen to me, son, daughter, you're probably thinking, well, when do I need to think about a working capital loan? Well, it really depends on you. I mean, right now you got to look at your operations. Are things where they should be? Revenue wise, are you making money? Or are you just like struggling right now? Are you killing it, monetarily speaking? Or things are complicated? The thing is, even if you're making revenue, you got to ask yourself, how long would that revenue last? Do I need a working capital loan maybe now or 3 months from now? So those are conversations you got to have with yourself or with your team. If you have a small team or a large team, it doesn't really matter. So the point I'm trying to make here is that you might consider a working capital loan if you need money to just cover the short-term expenses. As I said before, working capital comes from the term short-term. It has a concept that is buried into short term. So we're not talking about money, the cash you need 1 year from now, 2 years from now, because you know what? 1 year from now, you might not be around. 1 year from now, if you don't get the cash to operate, it'll be very complicated, right? So, and this is not just you though. I mean, a lot of companies are having this problem. I mean, you saw what happened with COVID. COVID, companies were scrambling to find cash. A lot of companies get a working capital loan because the thing is that sales are seasonal or otherwise cyclical, right? So if you have to deal with cyclicality or seasonality, I mean, you can't really operate with the dips in revenue, because while your customers are taking 30 days or 90 days to pay you, you got to make payroll. You got to cover payroll, right? And you have to understand that if you are in the manufacturing industry, for example, manufacturing needs are greater during low revenue months, and the business needs to cover production costs while finances are tight. So the point I'm trying to make here is that you need to be very careful about when to consider a working capital loan. Make sure that whenever you consider it, especially when it comes to a low doc LLC business funding arrangement, make sure that you have the proper documentation. And I'll speak about the documentation later on. Don't worry about it. But boss, I want to quickly remind you of today's topic. We're having a conversation about LLC, low doc business funding. How do you get it? How do you prepare for it? And how do you get approved with a massive amount? I want to talk to you a little bit about the types of working capital loans. So now that you have a clear idea about the typology, I mean, not the typology, but the conceptual understanding that you need to have about working capital, let's talk about the typology. What are the different types of working capital loans? The thing is, you can have term loans, you can have business lines of credit, you can have SBA loans that can be converted into working capital loans. You have invoice factoring. You have a constellation of business loans. The thing I'm trying to say here is that any loan that can actually take care of you in the short term, can help you cover everything in the short term, it could qualify. That loan could qualify as a working capital loan. Okay. And when we talk about the low documentation element of it, low documentation just means that they're not asking you for gazillions of documents. They're asking you for 2 or 3. And usually they will ask you for a business plan. They will ask you for business financial statements, and they might ask you for business licenses and permits. This trifecta will help you a lot get your low doc business funding, low doc working capital. Even if you have fair credit or bad credit, the idea that if you have bad credit you can't get business funding, that idea is steeped in people's minds because nobody really talks about the importance of business plans. See, the thing is, if you when you think about bad credit is a reflection of things you have done in the past that didn't go your way. But a business plan has a prospective nature, has a prospective vision. So you're telling the lender, hey, listen, I might have effed up in the past, but here I am with a new vision, with a new approach, and I'm going to crush it. But that's why it's really important to have a business plan. One thing I want to say here is that, again, if you want to get a low doc business funding arrangement with a working capital for your LLC, have this trifecta. You want to have financial statements, licenses and permits, and you want to have a business plan. In some cases, depending on the state you are actually applying from, the lender might also ask you to connect your bank account to their bank account, or just show them your bank statement. By the way, boss, I want to quickly remind you again of today's topic. We are having a conversation about LLC, low doc business funding. How do you actually get a massive amount even if you have a low or bad credit? Low or fair credit? Low credit, bad credit, or fair credit? But before I actually, move a little further, I want to really talk about the pros and cons of working capital loans. When we talk about working capital loans for your LLC, there are a lot of pros and there are a few cons. What are the pros here? Well, the funds can solve cash flow needs for your LLC. If your LLC is in an industry that is cyclical, that is subject to cyclicality and seasonality, if your business is in let's say in an industry that sees ups and downs, ebbs and flows every now and then things can be very complicated from a liquidity perspective, from a monetary perspective. Things are kind of complicated with your budget. You have to scramble to find additional cash. If you are in that situation, then yes, if you have a working capital loan, you can actually use the cash to do a lot of things. And working capital loan can also help seasonal businesses cover season-driven dips. I mean, you're probably sitting there right now, and you know that you're making maybe 90% of your revenue around Thanksgiving. But here we are in the summer. Here we are in the spring. Here we are from January all the way to October. You are making 10% of your sales. Can you imagine? How are you going to survive? How are you going to pay the bills? I'm not even talking about payroll. I'm not talking about those because you can say, you know what, this is my business, and I'm going to not get paid as much. But if you don't get paid, how are you going to live? How are you going to survive, right? So this is why you need a working capital loan, so that kind of loan can cover season-driven dips. And loan amounts can extend up to $2 million, in some cases $5 million. And you do have a very flexible set of qualification requirements. So even if you have bad credit, even if you have fair credit, even if you have a low revenue, you can still qualify for a low doc LLC business working capital loan. So you heard about the pros of working capital loans. I want to talk to you now about the cons of working capital loans, because listen, everything in life has two sides, and you have the yin and the yang. You have the good side, we also have the bad side. One thing I want to say here is that when we talk about working capital loans, depending on the state you are actually applying from, you might have lenders who want to have some additional layer of collateralization, additional layer of risk mitigation. In other words, they will ask you to post collateral or have a personal guarantee. Okay, normally you can get an LLC, low documentation, working capital loan with fair or bad credit, no personal guarantee whatsoever. If you are able to have what I just told you about, the business plan, you got to have your financial statements. Again, if you are a startup or your financial statements are kind of like showing a negative amount, you can actually have financial projections. That's when you have financial estimates, so that you're telling the lender, hey, listen, I might be having problems right now with my actual results, but I want you to see off here that I'm very optimistic about the future. So if you can show the lender that he or she, the lender, might waive the personal guarantee requirements. So this is a hack that a lot of entrepreneurs don't know about. So that's why they're really pissed that they always, like, their asses get denied over and over and over. This is because they have no idea how to navigate the sometimes treacherous waters of business credit with low documentation. Another detriment here is that a working capital loan may come with short repayment terms, so the lender, scared about you actually disappearing with the cash, might ask you to repay the loan within 3 months or 6 months. You're not having all the 5 years you're used to having with a traditional loan. The traditional loans you're having for 6 months. And some lenders charge high interest rates and other processing fees. Again, it's all about offsetting the risk that you might default, right? And some working capital loans require weekly or daily payments. That's what I said before, that they will ask you to actually make payments on a daily basis. And this can be very dichotomous. It could be contradictory to your liquidity needs or your liquidity management. But hey, listen, it is what it is. So how do you actually get a working capital loan with low documentation for your LLC if you have a bad or fair credit? So there are 3 documents that you have to really have ready. I already told you what those 3 documents are. That's what we call the magical trifecta. You gotta have your business plan. You gotta have your financial statements, and your statement can be those statements can be projections. You gotta have also your business licenses and permits. Okay. And what you want to do here is that you want to sit down with your team or with yourself and ask yourself, how much do I really need? Do I need 10 grand? Do I need 25 grand? Do I need 50 grand? How much do I really need? And there is an ancillary question that comes after that. How much am I able to repay? Okay, so because the whole thing here is that it's not about just how much you need, because the lender will give you everything you need. The question is he or she going to be repaid? That's what they are scared about. Like, lenders are scared about this like crazy. So because of that, they're not going to advance you the cash if they have no idea, or if they have no assurance that you will be in a position to repay the loan. So this is why whenever you actually want to borrow, either with low doc or full doc, either with the excellent credit or bad credit, you want to always pay attention to the repayment part of things. Because in any loan arrangement, whether it is working capital loan or other types of loans, has 2 sides. And you got to find a way to actually, and you have the lender side and you have the borrower, your side. And the lender side is that, hey, listen, I want reassurance that I'll be repaid, that my investment, because a loan from the lender's perspective is an investment, then my loan, it will not be a loss. I will not write this off as uncollectible accounts. So you also want to evaluate your borrowing needs. You want to check your business and personal credit scores. You want to research and compare lenders so you are clear about which options you want to go with. You want to gather the required documentation. So your LLC, again, will need very few paperwork, or very little paperwork when it comes to a low doc business funding. And then once you do this, you just submit the formal loan application, and you can submit the application online if you go with an online lender or an alternative lender, or you can submit the application to at a branch if you have chosen to talk to a bank or a credit union. Either way, you are in good hands if you talk to the lender before submitting the info, so that you are clear about what to do, and then you will not make any sort of crazy mistakes. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just quickly talking to you about how to actually get an LLC, low documentation business working capital loan, even if you have a fair or bad credit. Thank you so much for your attention. I'll see you next time. But until then, remember, stay marvelous.